Welcome traders to this week's analysis of DXY dollar index. Thanks for joining me in this analysis. What we are going to do is look at the previous analysis and then we are going to start afresh because a lot of things have actually happened in last week. As you might have noticed in the market, it was kind of like in a one directional move which was happening for 2-3 days in last week. So before we go there, what we need to do is look at what we have been looking at. So in my previous analysis, I mentioned that we were looking at this FCP zone, and from here we were expecting market to fall, and that's exactly how it happened. Then this FCP zone in the middle was kind of like in a decision zone, because if the market had started moving upwards, then this was the target point, and ultimately this zone was going to be the target point. But market obviously decided to go down. It tried here, came right into 93.37, the level that we identified a few weeks ago. It came right in there, tried to retest it, but again it failed to actually find enough bullish momentum to continue going upwards. So it failed, and this is the this candle was the decision candle, saying that it wants to go down. And on Friday it was falling down, and it is still kind of falling down right now, because this is kind of a continuation candle. So what do we expect? We expect that the next week, as soon as the market opens, it can actually reach this level of 92.89, and that is the level that we identified a few weeks ago. And you will notice that this is also a very good demand zone. This is where this entire move started. So once it has reached there, we can expect upward move, but it may or may not be a huge move. It may be just minor correction or so. So the first day can be bearish move. There can be a little bit of bearish move or upward move, both both chances are there. But after that we are expecting upward move, at least for some time. So that's what it is. However, if 92.89 is broken, then we are looking for downward move. Okay, we also had inverse head and shoulders forming there, which is still intact, although the neckline was broken and the market has come back inside the neckline. But this is still intact because market can actually create another shoulder here, which is that happens quite often. So it can create another shoulder here and go upwards, as long as it is not violating the head, right? These two levels are kind of head, and if you want, this one is specifically the head of this head and shoulders. As long as this is not violated, we still have that head and shoulders intact. Okay, so this is what we had, and I've given you enough idea around here, but let's start afresh. So let's remove everything, go to the monthly time frame, and see what has been happening. Okay, so on monthly time frame, as I've been mentioning in my previous analysis several times, I mentioned this, that market has been creating a W pattern here on monthly time frame. And if you want, you can draw Fibonacci from top to bottom here, and you will see that market has come to 38.2. That means at some point in time it can come to 78.6 or 88.6 to complete that W pattern. For now, what we can see, that market is struggling with 61.8, and which basically means that market reacted to this and went back to test out, and now it is falling back again. However, we can also see that there is an inverse head and shoulders here, right here, and that can actually push the price up only if 101, that particular neckline, is broken, right? So that's very high time frame picture for you. Now, in my previous analysis around July and August, I said that market was going to come to this level of 91.91, because we had this moving average right there, and we also had a very good area of support here, and this also confluenced with nicely with with an M pattern which was forming there. So that is why we were expecting market to move upwards, and it did for the entire month of September. Now, September month failed to close above this August month high, and that is why I mentioned at the start of October that we could see some bearishness in dollar here. So even though this is kind of engulfing candle, but it is not, because it actually failed to close above here. So that's why this bearishness is there, and this can continue for like few days, or in extreme cases it can actually come down to near about 90 level or so, somewhere around here. I mentioned that in my previous analysis, and the reason behind that is, if I draw Fibonacci on here, what I see is that market has reacted to like it came very close to 78.6, but it never actually touched that. So this can be an important level for us, because market may want to come there, ultimately touch it before it starts to go heavily upwards. Okay, and we also have, if I go to the weekly time frame, we also have a pattern here, which can actually complete right where this line is. So all of those things actually line up very nicely. If I show you this, give me just 1 second. Okay, yeah. So if I draw Fibonacci on this, what I can see that market has come near about 78.6, which basically meant that it was supposed to come to 127.2, and that is why the market started to move upwards. But you see what actually happened here is that if I draw Fib from top to bottom, it got stuck into 23.6, which is a very good sign for consolidation. When we have downward move or upward move, a strong move, market usually gets stuck in 23.6, creating consolidation period. But ultimately it wants to come to 38.2, somewhere around here at 96 level at some point in time, whenever this sort of move is over. You can also see that market is kind of trying to create a W pattern. So whenever the last point is done, second to last point is done, then it will start to move upwards, and that can give us a very good, right. So this is right, this is kind of aligns nicely with that. Yes. Okay, so what we have here is the market is actually moving down right now, and the reason behind that is because it actually failed to close above the previous high. So it can go down all the way to this level. So these are all the important levels that we have, and then at the top we have this as well. Actually, no, that not. Okay, so if I go to the daily time frame, the level that I have is right there, and if we draw fib on this, what I can see that it nicely confluences with 61.8. So this becomes a very good zone, very good FCP zone for us. And then we also have this M pattern here. So if I draw Fibonacci from there, okay, and if I draw, yep, so one pattern actually has completed right there, so that's why we can actually expect bullish movement a little bit upwards. But this, if the market actually comes into this FCP zone, then we are going to have a better chances of actually moving upwards. But obviously it remains to be seen how the market approaches this level. This is also the midpoint of this entire big M pattern. Okay, so if that gets violated, so we are looking for something like this. If that happens, and that will be the last resort left, because see, that is the previous shoulder, and this is the head, and this is the right shoulder. So if the market reaches there, that will be the last case, like in the last bullish case left for DXY, because after that, if it actually starts to go below, or it starts to challenge the head, then it may or may not sustain that kind of bullish momentum that it had previously. But you remember, we also have this level present there, which came from higher time frame, so this level. Okay, so at the moment, this month, this is not looking very good, unless and towards the half of the next half of the month, it starts to pick up any bullish strength. But this can actually give us very good bearish opportunity on DXY. But I'll be watching very carefully around this FCB zone, and on daily time frame also, this is also looking very good, so I'll be watching trade around here. If I go to the 4-hour time frame, what we can see that market actually started to show some reaction around here, because as I said, one FCP pattern has already been completed, so it can actually start to move back into this sort of level which is already there. So it can actually start to move there, but I'll be very careful, like, if it starts to go there, because I will wait for a proper confirmation here before I can take a long trade into this level, which also coincides nicely with um, the midpoint of this entire M pattern. And the reason behind that is this M pattern, although it has been completed, but I think the better level is around here. So it is possible market may actually come into this zone and then start to move upwards. So that is quite a possibility. Let's look at few other things just to find out if there is anything. Okay. Right. Okay. And yeah, yeah, yeah. It's quite possible that market may actually come in here and then start to go back down again. So that is also a possibility in there. So this is what we have on DXY. Hope you found this useful. Hope you found this informational. If you did, hit the like button, subscribe to my channel, and share it with other traders. Thank you.